Hello and welcome, everybody. I am Shelley Bromberg-Lambert. I'm the interim CEO of the YWCA Metropolitan Chicago. We are proud to host this important conversation today of impact investing and the emergence of strong ESG investment products. I'd like to thank our partners and our event sponsors for their support today. A big thank you to Morningstar for sponsoring today's event. A special shout out to Morningstar's Global Controller and Chief Accounting Officer, Kim McGarry. Kim serves on the board of the YWCA Metropolitan Chicago and has helped us shepherd our ongoing partnership. I'd also like to thank our friends at YWCA USA for their partnership in our impact investing initiative and for being a promotional partner for today's event. And finally, I'd like to thank our sponsor and partner, Impact Shares. 3 years ago, the YWCA partnered with Impact Shares to launch the Impact Shares YWCA Women's Empowerment Exchange Traded Fund. Since that time, we have collaborated to bring attention to the things that corporate America can do to empower women in the workplace and to bring capital to the critical work of the YWCA and the work that we do each and every day. I'd like to take time now to introduce you to the founder and CEO of Impact Shares, Ethan Powell. Welcome, Ethan.
Thank you, Shelley, and thank you for everyone for being here and all of our great sponsors for making this possible. And I can't think of a better group of panelists to talk about money and morality than what we've got here. Impact Shares is a nonprofit 501c3 registered investment advisor that works with leading social and environmental advocacy groups to help expand their mission to the private sector. And I think what you'll see here with some of the panelists is the passion, the insight that these individuals and the organizations have on these important social and environmental issues far outpace what we as investment professionals are able to deliver, not because we're not well-intended, but we haven't spent 160 years in the case of the YWCA advocating for women and the elimination of racism. We have our Women's Empowerment Fund that we partnered with the YWCA. It's ticker WOMN. And Dory and Jill from the YWCA Chicago were instrumental in creating it, as was Morningstar and Sustainalytics. We think of Morningstar and Sustainalytics as sort of the financial engine that drives the solution. But the YWCA Chicago with Dory and Jill, we really think of them as sub-advisors for an actively managed social outcome. So they do a lot of tremendous work with a lot of these public companies to not just understand their score, but also to help improve their score. So that's why we think of them as an actively managed social outcome. I think with what you'll hear from them, I think you'll appreciate sort of the passion that they bring to bear. And with that being said, the moderator is none other than Dory McWhorter, who spent the last 8 years transforming the YWCA Chicago from a traditional social services organization into a 21st century growth and social empowerment and impact engine. One of my favorite quotes from Dory, and I use it all the time, is nonprofit is not a business model, it's a tax status. And she approaches everything she does with the insight and enthusiasm that she did as a partner at a major public accounting firm. And that's the type of skill set and insight she brings to social empowerment. And I couldn't be more delighted to be part of this. Thank you guys for letting us help sponsor at Impact Shares. And I hope you look at our 5-star Morningstar fund, the YWCA Women's Empowerment Fund, ticker WOMN. And with that, I'll hand it over to Dory.
Thank you, Ethan, and thank you for being such a great partner with the YWCA. I have to say, though, I would be remiss if I did not actually give my new title, which is the CEO of the YMCA of Metropolitan Chicago. We could talk about that more later, but nonetheless, I'm still committed to the empowerment of women and all people, as well as ensuring that impact happens across all the channels available to us. And I have to say that I'm thrilled to have the panelists that we have today discussing this. So I'll invite our esteemed panelists to join me on the screen as we begin to have a conversation around how we are using tools like Ethan described to create change. And so I see 3 of y'all, one more when they get the camera rolling here, and we'll be in business. Yes, there's Robin. So thank you all for joining us today. I'll quickly just go around the screen so that our audience knows just how fortunate they are to hear from all you amazing women and have share your perspectives today. So first I'll start with Abby Adlerman. Excuse me, Abby, for slaughtering your last name there. Abby is the founder and the CEO of BoardSpan. And as the founder, Abby brings more than 25 years of governance and board experience to BoardSpan. Her previous roles are very diverse and broadly extend to serving on Russell Reynolds Associates Senior Leadership Team, to living in Singapore and running the Russell Reynolds Asia Pacific private equity business, to leading a 45-member team in San Francisco, to spending 15 years on the Wall Street Advising Board. She also serves as Yale's Entrepreneurship Advisory Board and contributes to other numerous corporate and nonprofit advisory boards. Abby, thank you for joining us. Next, we have Robin Washington, strategic advisor and board member. So Robin also has an extensive background, serving as an executive vice president and chief financial officer of Gilead Sciences for 11 years, also the CFO of Hyperion Solutions, and spent 9 years with PeopleSoft in several different roles. Prior to PeopleSoft, Robin was the director of finance for Tandem Computers, an accounting analyst for the Federal Reserve Bank of Chicago, and a senior auditor for Deloitte. Her various experience and leadership roles make her a great asset to the numerous boards she serves on and the chair position she holds. Thank you, Robin, for joining us today. Then we have Marion Mackindo. Marion is the head of ESG and strategy and engagement at Uber. As the head of ESG strategy engagement at Uber, Marion spends her time engaging with investors on ESG issues and is responsible for producing Uber's ESG reports. And we'll talk a little bit about, this is the first time we're for those of you who don't know, we're using the ESG term, but we'll talk about explicitly what that means in a minute. Prior to Uber, Marion served as the director of investment stewardship at Charles Schwab, and her career includes 7 years as an investor and ESG subject matter expert at Chevron, in addition to her 7 years as director of ESG research at Glass Lewis. Marion's passion for foster care youth has her serving as a board member for a nonprofit organization based in California. And our final panelist, so thank you, Marion, and welcome. And our final panelist today is Amelia Furr. Amelia is the head of sales at Morningstar Indexes. Amelia joined Morningstar in July of 2020, so a pandemic hire, and is responsible for overseeing global sales for Morningstar Indexes. Prior to joining Morningstar, Amelia was regional director for Midwest and West Coast index sales for global index provider FTSE Russell, part of the London Stock Exchange Group. Prior to her time at LSEG, Amelia spent 6 years at MSCI as an executive director running the Midwest-based sales team. Amelia's fierce leadership, knowledgeable insight, and determination has contributed to the expansion and many successes of the London Stock Exchange Group and MSI. So I wanted to go through all those bios quickly, just so that our audience just really gets appreciation for the perspectives that each of you are bringing to the table. I've been looking forward to this for so long, so I just want us to jump right in. But we had mentioned, when we introduced Marion, I had mentioned the term ESG, and I know that ESG is out there a lot. And I'll have to say up front, I'm very mindful, audience, that there's going to be a mix of people out there. So I know that there's going to be some investor types. There's also some consumer types. And I know, because of the broad audience that the YWCA serves, that we don't always know who exactly is on our call. So please forgive us if some of this seems elementary to you, but also be expansive in your thinking, as hopefully you learn something new today as well. So as we talk about ESG, Marion, I'll actually start with you. When you hear ESG used, what does it mean to you?
Well, thank you, Dorian. Thank you so much for having me on the panel. Everyone's bios, actually hearing them read aloud, made me realize what great company I'm in. So I really, really appreciate it. And it's funny, when I was thinking about how to answer this question for folks, I didn't even, in my answer writing it out, define what ESG, the letters actually mean, because there's so much to unpack about what ESG is. It seemed like the letters weren't important. But ESG stands for environmental, social, and governance. And I've worked in ESG industry for about 17 years. And in my mind, what makes ESG different from corporate responsibility or corporate social responsibility or social impact or philanthropy is money, shareholder money. ESG is not about values. It's my perspective. Interested to hear the conversation. ESG is about value. So it differentiates it from other variations on a theme of sustainability or responsibility is that it focuses on shareholder value and revenue generation. So I always joke that when I come to work, I stop caring about people in the environment because my job is to serve shareholders. And I always hope that the mic doesn't get cut off then because I think I'm a sociopath because the fact is it's the same story, right? They're not mutually exclusive. It's the exact same story. If you don't take care of the natural and human capital on which your business relies, so your employees, or in our case, platform users, cities, drivers, etc., your business, our business will not be successful in the long term. So when I hear ESG, I think products, operations, license to operate, employees, attraction and retention of human capital. Who's making decisions? How are decisions being made? That's the G, right? Ethics, executive compensation, and the intersection of your business and purpose. Why do you show up every day? How do you show up every day? Why do you exist as a company? So at Uber, our purpose is we reimagine the way the world moves for the better. So I try to incorporate that thinking into everything I do. Go anywhere, get everything, keep for the better movement, reimagination. Some folks call this view stakeholder capitalism, and I have no beef with that term. But I also think that shareholder capitalism, and this may be where my view differs, shareholder capitalism and stakeholder capitalism are the same thing in the right time horizon. So what does ESG mean for me? Well, I'm a pessimist. And I think if you ask 8 billion people to change their light bulbs because it's good for the environment, that's going to be a really long slog. But if you tell them it will save them money and they're not going to have to go on as many ladders, that it's better for their quality of life, that's when you make a difference. And that's where ESG gets slotted in, is this good for the environment, good for people, good for business. So ESG means to me, it's a collective alignment as individuals and as a society that doing the right thing is good for business.
Thank you, Marion. And part of the reason that the phraseology of the question was, when you hear ESG, what does it mean to you? Because I think, Amelia, I'll go to you next, because I think what it means really does differ for people. So Amelia, can you share your perspectives on this?
Sure. I think, from an index provider perspective, I think, and financial services overall as an industry, I think that it gives us a new opportunity to connect with end investors. So it gives us greater abilities to align financial and personal goals. So some of the topics that Marianne touched on, but and I think overall, I think about transparency. So, as an index provider, we're meant to be a measuring stick for investment funds. And as a Morningstar operation, we're also a measuring stick for equities themselves. So, ESG data gives investors more color into a company, and indexes and ESG indexes give more color into the ESG or sustainability of a fund, if you will. So, looking beyond a balance sheet or standardized financial data, ESG gives us another lens, if you will.
Great. And Abby, I'll pop over to you and I'll sort of twist the question just a little bit in terms of, as you think about ESG, between Marion and Amelia, we've talked about sort of the investor lens on that. But we, particularly, I'll put my YWCA hat on for a quick second, that there's a lot of perception that, as Ethan mentioned and talked about the ETF and the fund that he created, that there is a myth that it is more about sort of, as Ethan says, the social alpha, the impact versus the return. So how do you address what ESG means to you, as well as this myth about the impact versus the returns?
So I would say that where Marion and Amelia both made their comments and probably have a few things in common, I think we all are getting to the same place, but perhaps I get there a little differently. I do think it's about value and values, and I don't think that they are in conflict. In fact, I think they're inextricably tied. So I think of ESG as responsible decision-making. And the key thing to know about it is it's not just an investment mandate. It's not just even a business strategy. It's increasingly becoming a way of life. And I don't mean to be too dramatic when I say it, but to me, ESG is a responsibility compass in all your decisions. So as far as the myths that you asked about, Dory, there's a lot of data that shows that ESG aware companies, ESG practicing companies actually have lower volatility and higher long-term returns. But let's face it, you can cut data any way you want to tell any story you want. That's the beauty of data. So the reality is that we don't know if ESG aware companies have better returns because of causality, what they're doing, or correlation. Those are smart, strategic people that are doing the right things anyway. But the key thing to remember is it's really not an either or, it's a how discussion. And that's where ESG has moved, thankfully, over the last 5 years to talk about how we implement it, not whether we should or why we should.
Thank you, Abby. And Robin, I couldn't help but notice that the head nodding. So I have a feeling that you were quite aligned to what Abby just said, but would love your perspective. And I'm going to extend the question a little more because some of it, I believe, by your head nodding, that there is some alignment with Abby. But in addition to that, there were a couple of things that Marion brought up. So when we talk about, I'll first ask you if you have anything else to add relative to how you see ESG. I would love that. But I'm going to expand the question on you a little bit because Marion brought up another term that I don't know that we've heard a lot and our audience may have differences of opinion about, but this notion of stakeholder capitalism. And so I would love to get your thoughts on the how ESG fits in with stakeholder capitalism, but help us even understand what that is, because I got to imagine that our audience is saying, like, what are all these terms that people are throwing out here, right? And I'd imagine that there's a range of information or knowledge about that. So let's start with what is stakeholder capitalism and then give your perspective on how ESG sort of folds into that.
Sure, Dory. Well, like Marion said, I'm just really honored to join this esteemed panel and provide my insight. And I may have been nodding on Abby, but in general, it's so interesting to hear the robustness of how all the panels describe ESG. But to kind of drill in on your first question, what is stakeholder capitalism? And I think Marion described it very well. I think more and more you've seen corporations really focus on their role and realize that it's broader than just shareholders. Now, that it is in no way to diminish the role of shareholders, but it's really to say that the purpose and roles of corporations exists not only to support shareholders, but the communities that they serve. That's where their customers come from. That's where their employees come from. It's also focused on the environment. And I think, as mentioned earlier, it really is about corporate purpose. Why do corporations exist? And I do think they have a broader remit. I think there have been lots of focus of recent, but I don't think stakeholder capitalism is really new. But I think it really is a remit that really helps define a vision and a purpose for a company. It gets to the missions and values. And why is that important? I think to Abby's point, data is always great, but I think if you think about companies with deep missions and values, long-term shareholder value is typically enhanced. And I think when you can align that, when you think about the broader remit, communities, employees, as well as shareholders, I think to the point you can't help but do better because you've got alignment across all those various perspectives. To your second question, I don't think I have much more to add in that, like a lot of things in America, we kind of try to put frameworks around how we think about things. And I think that's just what ESG is. It's a framework that really allows us to measure, compare, contrast, and give us another way to provide metrics and transparency around all these fundamental things that I think are ultimately very, very important to long-term shareholder value. So the terminology ESG, I think if you step beyond it and look at the definitions as Marion described them, there are things that companies should be and are doing but I think now we've got more alignment across shareholders, employees and everything, back to stakeholder capitalism, that have kind of put it front and center in a way that we want to be transparent, and we want to think more about how we can measure it so we compare and contrast who's doing well, who's not doing well, as we focus on these really critical, important issues that, again, I believe drive long-term shareholder value.
Thank you. Thank you. It's always a challenge for me as a moderator to not look like a bobblehead as I'm agreeing with everything that all you all are saying. And so that's one thing that I need to figure out how Zoom can create a filter to keep my head straight. So, but thank you for that stakeholder capitalism definition, and really tying that to, again, round out how we describe and think about ESG. So Abby, I'll go back to you as it relates from a governance perspective. How are you giving guidance, or what guidance are boards seeking as it relates to ESG? Because I do think that there is, like everything, sort of as Robin described, if it's a framework, there's sort of a capability maturity model, right? That some are embracing the framework, others are figuring it out. So what guidance are boards seeking as it relates to ESG?
I'm so not used to being on mute.
You can stay off mute, Abby. Help yourself.
Thank you. As Robin just pointed out, ESG is a framework, and I think it's still very much evolving. But even while it's out there as sort of some beginning scaffolding that's being put around it, it's still incumbent upon a board and the leadership of any organization to say, well, how does this relate to our company? What are the right metrics that we should be monitoring? If we're a biotech company, or if we're a industrials company, or if we're an energy company, they're going to be different in all those different cases. So how do we know if we're making an impact, positive or negative? And the vast majority of boards will admit that they just don't know what they don't know right now. It's such early days. So it's a really complex, dicey topic. And as we start to peel the onion back, what we're going to see are this, cottage industry or more of real expertise around the E issue and the S issue and the G issue. And then we'll take it one step further, which is how do they interrelate to each other, and how does a decision about what you're doing in an E part of your business affect what you're doing in an S part, et cetera, because that's where it gets even sort of exponentially more complicated. But just to distill it down to the overall point you're saying of how do boards, seek to really understand it? Honestly, it's one step at a time. It's the only way you can do it.
Thank you for that. So Marion, now you are involved in some of that implementation that Abby talked about. So tell us, with your experience really working within a corporation to implement ESG strategies and guide the corporation as to what that looks like, what does it look like from the inside of things? What's your experience been?
Yeah, actually, Abby, your comments made me think about a time, as I said, I worked in this for 17 years in this very weird intersection between environmental and social issues and investors. And I remember in one of my engagements, I was talking to a CFO at a oil and gas company, and they said ESG has never come up on earnings calls. And I don't know how many of you guys have heard something like, why should I care about ESG? It never comes up on earnings. But then I had to ask, what about that $300 million fine? What about that for spilling oil in a nature reserve? That's E, right? And that's S when you have, when you're having employee relations issues. Those things actually have always been part of decision making at the board and executive levels, but people aren't framing it in this ESG box. So part of it is about learning the vocabulary and making sure that folks know what ESG means to your company. So to that point, at Uber, our ESG program is focused on how Uber thinks about, prioritizes, and manages its most material environmental, social, and governance issues. So that's a definition broader than that used in our financial statements, but the ones that actually matter to the success of our business and that matter to our stakeholders. So any ESG program, in my opinion, that's worth its salt should be built around a materiality assessment. So that's where I started when I joined this company back in April of 2020. And doing this materiality assessment where you try to suss out what these issues are, just provides evidence to your investors and your other stakeholders that you're focusing on the right issues. Companies don't have unlimited resources, and you can do issue whack-a-mole if you want. You can spend decades just responding and being reactive to ESG issues that come onto your plate. But how do you know as a company what you should be paying attention to? It's easy to react. It's harder to strategize. So you do a materiality assessment to help you answer those questions, or to help boards understand, help management, help boards, help the whole company understand, what are the issues that a company should be focusing on. So at Uber, our ESG report has a visual of the outcome from this assessment, which I finished in June 2020, which, by the way, if you bring yourself back in your mind to June 2020, it was one of the weirdest times ever to complete a materiality assessment, and how the outcome, I'm always curious how the outcome of doing it in the middle of a pandemic, in this reawakening of the discussions around anti-racism and discrimination, and in the wake of the George Floyd protests, it was such a, I wonder what it would look like if I did it today, and we'll redo it again. But anyway, we ended up with 9 material issues. They're in the upper right-hand corner, the important to the business, important to stakeholders. And even at just a high level, when we got these issues, and I'll just say a couple of them: driver and delivery person well-being, climate change, diversity, equity, inclusion, anti-racism, data privacy, cybersecurity, ethics, safety, and local impact. So when you hear these, I doubt they come as a surprise to you. Like, I doubt any one of those you're like, really, that's an issue that Uber's facing. So a materiality assessment shouldn't be a surprise to a company. And so it was good news that ours wasn't. And my job on the inside is to tell that story and help shape that story around Uber's governance of these issues, the strategy around these issues, and metrics and targets. I don't remember who was mentioning this, but the accountability piece, I think it was you, Amelia, about transparency and accountability and measurement. And that's a really important part, is the metrics, so you can have targets too. And we do have board oversight of our ESG program, speaking of governance, and several ESG issues are embedded into our executive compensation program. And I think that's best practice, right? The smart mouse gets the cheese, and executive compensation tells this story about a company's priorities. Like, it tells you, you manage to this. This is what among the many things we want you to manage to, we want you to manage to this. So we have DEI metrics embedded in executive compensation, user safety, and earner satisfaction. So from the inside, it doesn't really matter what kind of company you run. You make widgets, you're a dating app, you print posters, you're a bank. You ask yourself this question: what are the ESG issues that matter most to my business and to my stakeholders? And then you build your program around that.
Oh, that's great. Thank you for that perspective and giving us sort of the inside scoop as to how companies are really looking at this. And Amelia, I'll have to go to you, because something Marion said about, one of her previous opportunities where someone said the investors aren't looking at or asking ESG questions. So is that true? What are the trends that you're seeing with investors and how they are considering ESG as part of their investment strategies?
Sure, it's an interesting transition from Marion, which talks about it at the company level and the individual kind of subsector level within these companies, and now we'll go to a much more broad range topic and in breadth. But so overall, I think there's several trends that we're seeing as an index provider. As I mentioned, our goal is to build these transparent benchmarks that investors can measure their investments against, or use these benchmarks as a basis for creation of a passive product. And I think overall the trends that we're seeing are just demands for greater transparency. So that'll probably come up again, and also making sure that investors can look at security levels and then also aggregate level. So fund level data across sectors, right? Comparing an Uber to a Lyft, for instance, in the public sector, or comparing one oil company to another is really important, and determining which one you're more comfortable having in your portfolio. So that's sort of the individual security level, but at an index perspective, we look at it, across the board at a fund level. And I think, the demands vary and the trends vary per region. So in Europe, we see a lot of regulation driving the trends. So there's a lot of focus around climate transition, reduction of carbon, Paris aligned benchmarks, and that's regulation driven. We don't have that same kind of regulation drive here in the US, but we still see a lot of demand for sustainability or ESG focused products. So what we see in the US actually is a broad range of products focused from, values alignment, where you're just really kind of pulling out some of those securities that you might not be comfortable with, like tobacco or firearms, nuclear weapons, then to sort of a more integration approach where you're looking at the vast number of securities that might be in a US broad market index and determining that you might want to tilt to those securities that have a better ESG risk rating, or to much more impact, much more focused in nature. So for instance, like the Women's Empowerment Index, which is much more impact in nature focused. It's a best of breed approach, and you're really targeting a specific, ESG outcome in those funds. So overall, I think, the demand is sort of across the range of those different product sets in the US. And then lastly, I would just highlight that it's not just within equities that we're seeing this. We're also seeing some multi-asset class demand. So for fixed income in particular, if you look at some of the public funds, the forecast is that, bond sustainability funds will double their AUM by the end of 2021. So, having that capability across asset classes will allow investors, many more options, and also allow them to complete their portfolio from a multi-asset class perspective.
Thank you, Amelia. I mean, part of the conversation we're having today, to your earlier point, that there's so many facets and aspects, right, to ESG and how it gets implemented, how it gets financed to some degree, right, and what that looks like. And so, as we went from Marion's very specific conversation in terms of what corporations are doing, and then you're looking at the investor market, I'm going to bring it back to Robin to talk about what's happening around the board table. So how have board discussions around ESG evolved over the years, and what are you seeing different stakeholders looking for from you all, and how the boards are responding? So would love to give your boardroom perspective, or the board table perspective, or the board Zoom room perspective around how ESG, the conversation is evolving.
Sure, Dory. Yes, Zoom rooms are alive and well these days when it comes to board meetings. But I think kind of taking into context everything you've heard about the measurements in ESG and stepping back, I think boards are always confronted with frameworks, right? In addition to thinking about stakeholder capitalism. And, as a former CFO, I'll go back to, the Enron days. It was all around SOX and being sure that then we focused a lot on enterprise risk management, right? And what that means, right? And how do we know that we're focused on all the right areas? Marion was describing that. And again, ESG, thinking about it, it's a great opportunity to really enhance alignment around how do you measure good outcomes in all regards. And again, I believe the ultimate North Star is long-term shareholder value. And there's just greater realization of the roles that corporations play in all the ESG areas to do that. So as a board, I don't think our fundamental roles have changed because of ESG. It's how we look at it. I mean, you're still focused on strategy, the hiring and firing of the CEO and the broader leadership team. I think one thing that's become more important is how do you embed this ESG framework and how you think about culture. And I think that's important because it's not just about report outs, but how do you really embed purpose, mission, vision in how you think about the future and how you measure successes, again, to enhance. So we're talking a lot about all components of it. We are spending more time, particularly in committees, as to how do we measure it. There's so many standards out there that are evolving as well. But I think at the forefront, the role of the board, when you think about strategy and leaders, even leaders, I mean, if you look at the past, 18 months or 2 years, more and more important, you look at the ability for leaders to deal with crisis, the ability of leaders to lead with empathy. So again, this framework, I think, is something that's moving, and ESG is something we're just incorporating in a greater extent of what's important, how do we measure it, but more importantly, how do we embed it in our values and our culture at the companies that we're providing oversight to ensure that these things are real. And again, with a focus on, are we delivering on our goals and objectives and driving long-term shareholder shareholder value. I do think comparability is becoming more important. I think shareholders are asking about this. So again, incorporating how you think about these things and some things around governance that are maybe less measurable than just financials are part of ESG. So they're not going to all be perfectly quantified. I think to Abby's point, it's evolving, but I do think these are questions that we ask more in the boardrooms, and I think they'll continue to evolve and be a greater area of focus going forward.
Thank you. And Abby, I see you raised your hand, but you don't have to worry. I was coming right back to you. So why don't you ask or comment on what you raised your hands about, and I'll go and ask you some additional questions as well. So please go ahead, jump in.
Well, thanks for the warning on that one, Dory. The reason that I felt so excited to make one additional comment is picking up on both Amelia's and Robin's points there about sort of where are we actually seeing change embedded into culture, and sort of how do you sort of achieve these long-term goals. I can't help but think about California's law around board diversity, starting with women in the boardroom and then underrepresented minorities. And if you want to look at an ESG, clearly ESG example, totally touches upon S&G, of where a regulatory impact was made. And, guess what? We all would have wished that diversity was such a truth, that diverse thinking is better for all of us, that we wouldn't have needed this regulation. But even if we kind of knew that, and that was kind of obvious, we still needed regulation to force us to do the right thing. And when that happened, what we found, so we do a ton of work in diversity recruiting at Boardspan, and what we found is that everybody not only said, oh, great, right, thanks for the reminder, I should be doing this, but then they said it wasn't that hard, and we are really benefiting from it. And I can't tell you how many board members I've spoken to, whether they're clients or candidates or people we're not even directly working with, who have said, this was a really good forcing function. And by the way, these are people that are not in California and not in Massachusetts or Illinois, or Washington, where there's either laws or strong encouragement. These are just people all over the place that are saying, our awareness has been raised on this issue. Mm-hmm. And that is just a great example of where it's having a very positive impact.
Well, thank you for sharing that, Abby. And so from that perspective, to build on that some more, as you're seeing opportunities to support boards as they are looking to figure out the best way to govern companies who are on this ESG journey evolution, what are the opportunities that you're leaning into to better support them? Like you mentioned, the diversity on boards. What other areas or what opportunities do you see to help boards on this journey?
Yeah, so there's a lot of information that's being thrown at boards right now, and that's good because, like we said, we're in the early days and everybody's still learning together. And so, I think which of that information is ultimately going to be the most relevant and has the most staying power remains to be seen. It's kind of a journey together. So the best advice that we give our clients is for our board clients is to collaborate very closely with your management teams. The reality is that management teams have been paying attention to these issues because they affect their culture. As Robin said, they affect the success of their business, their long-term important to the business, points that Marion and Amelia have both made. And so the key part that we see is that dialogue between boards and management is really constructive and open and transparent, because everybody's going to go learning through this process together. The reason that this is really hard is twofold. One is it's really complicated stuff, right? I mean, ask Marion. I mean, she's doing all this analysis and digging really deep into these issues, and it's super, super complicated. The other reason that it's really hard is that the boards already have a very, very full agenda. There's so many other things that they're taking on around risk and global competition and sort of understanding their constituency. Some of these are really existential topics. So, As a result, there's nothing wrong with boards and management leaning on each other to learn more and to collaborate and to partner their way into success. As long as boards don't ever lose sight of their oversight responsibility, their ultimate accountability, the importance of being arm's length and truly independent, then there's no reason that they can't also be collaborating.
Great. Robin, I see your hand. First of all, I'm loving this panel because y'all are like, I'm next. So this just helps a moderator immensely. So Robin, please chime in.
No, I totally appreciate the comments that Abby was making about the areas of focus for boards and everything. And it just reminded me, Dory, going back to your area of accountability, shareholders are asking for more of this around diversity and inclusion. Employees are asking, for more around these areas. And, companies are making commitments, out there around long-term goals, be it around climate, being carbon neutral, be it around diversity goals and initiatives. So to the point being made, the role of the board is just to ensure that, again, we're not just tracking numbers, but we're truly trying to enhance cultures and everything and focus on these areas, right? So, and that's tough work. I mean, these are things. So I think this framework around measurement gives us increased visibility externally and internally, but it also forces us to really drill in and understand what's happening and look under the covers in different ways. And I do think that's overall benefit to the companies and society in general when it comes to some of these areas. So it's just something that we need to continue to focus on. Our work is far from done, particularly when it comes to D&I and some of these other areas, but I agree that there's awareness. The other thing that I think is, we talk about a lot of these things in the framework of public companies, but I think there are huge opportunities in private companies or companies going public and we are further behind in some of these areas. So I think this framework is something that we should think about not only in the context of publicly traded companies and boards, but in the private equity, venture world, et cetera, where I think progress is behind from, some of the transparency that we get to see in publicly traded companies.
Sure. So I'm going to quickly jump to Marion. First of all, a couple of things. I see some questions coming in our Q&A and our chat, and I'm going to try to address some of those. But Marion, with some of the statements that were brought up already, it made me think about how do you see companies addressing the range and often competing mandates and expectations? We've heard a few different examples, but how are companies addressing sort of the ESG and the competition between the E and the S, or the S and the G, or whichever ones are competing in
yeah, absolutely. Time. And to answer that question, Dory, I'm going to answer a completely different question.
Oh, go ahead.
Actually, just to respond to
I appreciate all this wisdom. So you say what you want.
I will answer that question. But I just was thinking about this board diversity conversation between Abby and Robin, and I had this imperative to say that we really have to, at the board level, and actually management level too, is just widen the aperture of skills that you're bringing into conversation, so that when you're recruiting, you're not just pulling from the same old tired pools of Ivy League ex-CEOs, because you're going to get a certain type of person, and we all know systemically that it's not going to be as diverse as if you pull from a wider range of backgrounds, especially, for example, human capital management, diversity, equity, inclusion, anti-racism. Let's bring in some chief people officers. Let's bring in technology officers, chief sustainability officers. These are skills that are needed and perspectives that you need to improve strategy, to improve decision making, not just to fill a quota, but to say these are perspectives that are needed now more than they ever have been, especially as like work and home are getting blurred. The world is on fire outside. Like, these are conversations we need to have at the highest level of a company. And now to your question about competing mandates on and ESG and such, I think actually to Robin's point, I've been taking notes because I'm like, this is so interesting. On like the
There's
job.
so many tweets here. It's so hard to be on the moderator and not like tweet out all these great little nuggets. But go ahead, Marion. Sorry.
It's very fun. But so to talk about the role of boards and the role of CEOs and how interesting it is that to Robin's perspective on boards and the role of the boards having remained mostly the same, which is strategy, CEO succession planning, culture. But I feel that the role of the CEO has changed a lot in the last 50 or 15 years. So it's interesting to see how the board's role is still pretty much the same. It's just to have oversight over the strategy, but the strategy is now much broader as we're shifting from shareholder capitalism to stakeholder capitalism. And the kinds of things you have to think about aren't just financial returns. It's how your company is going to fit into this broader ecosystem, how it operates. So a fundamental issue that Uber had in 2017, anecdote, when Dara first joined the company, and you may remember in your head that 2017 was a wild year for the company. There's a book about it. I think there's going to be a mini-series too. But at that time, when Dara joined the company, if you asked mayors around the world, our ecosystem is cities of the world, right? If you asked mayors around the world at that time, do you want Uber to grow? Do you want Uber to grow in your city? And many would have said no. A smaller Uber is a better Uber, or a no Uber is the best Uber. And how is that good for business, right? When you think about a competing mandate for E&S objectives or corporate objectives, you think about this story, and how is that good for business when your constituents would prefer to see you smaller or gone, right? And that's because cities saw us as operating contrary to their own values and their own goals on climate change, safety, workers' rights, diversity, et cetera. And now, following the transition of our board and a change out in the leadership team starting with Dara, Uber's a different company now. We've taken vocal leadership positions on all of these issues. We partner when we partner with cities on their own sustainability objectives. We have over 550 partnerships with transit agencies now, helping cities deal with the low density last mile or late night service. We're natural allies with transit, which is something we weren't actively pursuing before. We're on the front line advocating for workers, promoting flexibility and benefits and protections to independent workers around the world. We're leaders in safety and transparency on safety. We have 14 commitments to anti-racism that we put out last year. Oh, and on climate change, we're fully electric in 2030 in the US, Canada, and Europe, right? There were days this year, I don't know how many of you guys live in California, but there were days this year the sun didn't come out. Like this, you open your curtains, the sun did not come out because of wildfire smoke. Houston froze, New York flooded. Like, we're all in this together, right? Climate change is coming and we're all in this together, and Uber wants to be part of the solution and part of the conversation. So instead of going against cities or regulators, E&S objectives, we're leading in these areas, and consumers want this. Employees want this. Investors want this. It's all about purpose and passion. To Abby's point on purpose, passion. That is what's good for business.
So thank you for that, Marion. And Amelia, I'll jump back to you, because we've talked about the different stakeholders, but at the end of the day, investors matter in terms of how the ecosystem is set up to either access these investments or create these investments. So what's happening? How is the ecosystem and the investing world responding to ESG requirements and interests? What's happening there to really facilitate some of these investments coming through?
Sure. And I think, before I answer your question, I'll follow the cadence of Marion.
You can do whatever y'all want now.
That's the format.
And I'll pile on to a previous topic that came up about women on boards. And while I think that is undoubtedly, an excellent metric to judge companies by, I think one of the things that's important as we look at different securities or companies and we look at, fund level aggregated data is that women on boards is sort of an endpoint, right? But when you look at the underlying data that fuels some of these sustainability focused funds or ratings, you look at somebody like Equileap, who is a ratings agency for gender equality, and they have 19 different metrics for a company to judge if there's really gender equality in that company. And so women on boards is sort of an end goal, but you have to think about all the other 19 metrics that you have to go through to get to that point. Nobody moves from an entry-level position to a board seat, right? So we have to foster the gender equality throughout the process and throughout women's careers, right? We have to look at, do we have great parental leave options? Do we have, management opportunities? Do we have diverse recruiting processes? So all of these 19 metrics are important in terms of getting to gender equality for each of these companies. Women on boards is an excellent metric, but there are so many other ways in which we can judge, the gender equality of a firm. And so I think that I can parlay into your question, which is, largely around, I think product issuers and asset owners and retail and investors are responding to this in all different ways. And so I think asset managers and advisors, stakeholders are responding in different ways as well. But a lot of education is still happening in the marketplace. So, we hear from investors and product issuers that standardized ESG taxonomy would go a very long way, right? So when you look at underlying data, for instance, you look at Equileap, which has, gender equality rating systems. You look at Sustainalytics, it has broad-based E, S, and G, and then a cohesive metric for ESG risk rating. And then there are other providers on the marketplace, right? And so not only are we educating the end investor and the asset owner in terms of what sustainability investing means, but then we're also educating them on the underlying data sets and whether or not their measurement sticks for these companies and funds aligns with their values principles. So one of the things we look to do from an index perspective is to make sure that we have a very clear understanding for our end investor in terms of what ESG risk rating we're using, how that's implemented into the index, and how ultimately that will end up, benchmarking your fund or being the basis for passive investment. And I think the other thing I'd like to highlight too is that, as ESG investing becomes so much more prominent in the marketplace, and as we see potential funds transition from broad-based benchmarks to ESG-focused benchmarks, one of the things that we have to think about, because we have all these different underlying ratings agency, is that there's a possibility that regulation will come to these ESG ratings, and that may change the structure of them. It may change reporting principles, and it may change a lot of things to get us to a more standardized taxonomy. And I think ultimately, as long as that suits the end investor, whether from an asset owner down to the individual investor, as long as that suits the asset owner, and provides more transparency and color to them, I think then Morningstar is absolutely on board with that. And from an index perspective, the more transparency, the better. So I think all the stakeholders are really trying to bring transparency and education to the marketplace. And the more that we get from ratings agencies and the more filings we get from companies that have transparency on their ESG practices, the better the data will become.
Wonderful. We have literally a few minutes left. Robin has her hand up, and so she's going to kick us off into our last thought, because I really want you all to express any last thoughts about this topic before we conclude today. So Robin, we'll start with you.
Yeah, I wanted to just quickly touch up on a really important point that Amelia made, and it can also be a last thought, Dory. That was that, again, thinking about it from the perspective of boards, what Amelia was saying is there's D&I, there's rankings around diversity, but what we're ultimately really need to do to seek success, not only for women, but underrepresented minorities, is inclusive cultures. Mm-hmm. So what it is requiring us to do is to really drill in and understand not only stats on who's there, but attrit rates, programs that Amelia talked about for underrepresented minorities, but how do you, again, ensure that you're creating environments that everyone can succeed at? And that's a difficult thing to do, but an absolute necessary thing to do if you're really focused on ESG and, the progressiveness of thinking about stakeholder capitalism. We can go on, but I do think inclusive cultures and measuring that, and the most important asset a company has is not something that's financially quantified, and that's its human capital. Mm-hmm. And I think at the core of a lot of things we're talking is about how do we create the right environments and human capital that we can all thrive in. And I think when companies are doing that, you're going to be attracting great employees, you're going to be more innovative, and ultimately, again, you're going to deliver on long-term shareholder value.
Robin, that was a perfect wrap up, but I want to get because actually that's what it's all about, right? It's about ultimately the human capital and what, and you being a CFO, I always tease folks, and like everyone says, people are the most important asset, but they're not on the balance sheet. But anywho, but that's always my little joke. But like quick round robin, because I really want to hear any other additional last words, but thank you, Robin, for that. So I'll go Abby, Marion, and Amelia to close us out.
Right. So Robin, I don't know if you saw me snapping. My teenage kids taught me that I snap when I agree. So shout out to the kids. My last thought also is to pick up on a point Amelia was making as well, which is she referred to board diversity as an end goal, and that is one way to think about it. But I also think about board diversity as a great place to start, because to the point of inclusion, that can come into an environment at almost any level. And sometimes what it's really taking is that awareness at the higher levels to pull people up through the organization, or to make these programs available, whether they're around parental leave or educational opportunities, et cetera. So from my point of view, I don't know, I'm not going to sit here and tell everybody that it really matters where that impact is made at the highest levels, the lowest levels, in the middle. It's that it is being made and that it's being embraced, because I think you can make a really positive impact at all of these different levels. The other sort of closing thought I'll just make is that if people remember, it was just 2 years ago that the Business Roundtable came out with its major proclamation that they finally said, shareholder primacy is not what we're after, that they lent credence to the fact that they're, what others have been saying for many, many years, that it is about stakeholders more broadly. There was kind of a false dichotomy up until then that it was sort of shareholders versus everyone else. And I might be a little bit of the lone voice on this one, but to everybody, I would just say, I don't think that is a healthy tension, shareholder returns versus anything else. I think it's very unhealthy because the vast majority of shareholders are people. And what we do with our investment returns really should go to the quality of life and the quality of community. And so I would just push back and say, not only is the tension of shareholders versus everyone else unhealthy, I actually think we're finally at the point where it's unconscionable. And I like that. So those are my closing comments.
Thank you, Abby. And I think it goes to a question that just popped up here too. So Marion, and then Amelia, and then I'll have 1 minute to say bye to y'all. So go ahead, Marion.
Yeah. So Abby, my son was on kindergarten Zoom last year, and whenever he had a connection, you're not allowed to talk, we have to show you have a connection. He would do this, because this is how they teach you in kindergarten. Like, I'm making a connection, or I agree with what you're saying. So now I felt like doing this a lot during the panel. I have a connection. So my last thoughts, my connections throughout are, it's almost a call to action to folks. Many people on here are probably employees. So when you are an employee, whatever your job is, whether you're CEO or any level at all in the company, is to try to integrate the principles around taking care of people and taking care of the environment. So ESG principles into how you think, and don't feel bad about it. Don't feel like you're Pollyanna coming to the meeting asking about how has your company thought about climate change risks. It's good for business, and don't feel bad about asking the right questions. Think about your company's purpose, why it exists, and how it adds value to its ecosystem, and regularly map your work back to that. Bring diversity into the conversation, bring climate change into the conversation. Think about your ecosystem of humans and plants, like the natural systems that you rely on, and think about how you can bring value to that, how your business can bring value to that.
Thank you. Amelia, take us home.
Sure. I would just, highlight, it was wonderful being on this panel. I think there were a lot of insightful viewpoints. And so it was nice to get them together in sort of a melting pot. I think it was a great perspective. I would just highlight overall that I think, we believe that better measures can make better investors. And so we're really committed to providing some transparency and better measures in this sort of ever-changing sustainability landscape. And, we look forward to continuing to improve, to provide better solutions for end investors.
Well, I have 1 minute to thank you all. So snap, snap, connect, all the hand gestures that we're learning in our new Zoom language. I just appreciate Morningstar for your partnership, Impact Shares for your partnership, and all of you for bringing your perspectives today. I wrote in the chat, just in case I didn't get a chance to do it, it's simple. Do good and tell everybody. Be transparent, right? And I think that this definition of good, I love what we've heard today, that all the different frameworks, whether it's ERM back in the day, I'm dating myself in the late 1900s, ESG, your ERM was a thing then, right? Forcing people to think about what impact are you having? What are the risks of that impact you're making? And the fact of the matter is that we can see it in an ecosystem where all of us play a role. I noticed a comment about community in the chats. The fact of the matter is that all of this impacts community from every stakeholder all the way through to the boardroom, right? And so there is no one that is outside of this conversation. So be mindful of the work you do, be mindful of the investments you make, and you can all do good from whatever stakeholder seat you sit at. So that's the summary of today, boys and girls. So I want to again thank you to all of you. Thank you for your wisdom. Thank you for the work that you're doing every day to make ESG actually be lived and fulfilled. And hopefully we can have a different conversation around how we just do good business, because this becomes the norm. So have a great day, everybody. Thank you so much.
Thank you.